All right, good morning. It is Monday, August the 10th, 2026. We hope everyone had a nice weekend. My kids start school tomorrow. Gosh, that's early. I know I've said that on a few videos now. Kids start school tomorrow. This morning, my wife was up trying to wake them up, getting them ready. Hey, we got to try to adjust our internal clocks a little bit. We've been letting them sleep in a bit this summer. And so she was in bedrooms just trying to get them moving with mixed results, I would say. So we'll see. There's no lying around tomorrow. We got to get up and get after it here. So we'll see. My mom and dad were in town this last week as well. I think I mentioned that on last week's video as well. Really nice to have them, playing with the grandkids, having an extra set of hands to help my crazy family. So all good there. Review season kicks off 2 weeks from today. All right, so we are really excited. Our team's working hard, putting things together already. Thank you to those of you who already scheduled your review here in the coming handful of weeks. Those of you that haven't, again, it really helps us kind of knowing the lineup, just the way we allocate resources and trying to prepare the best we can for each of your families. So if you could please schedule sooner rather than later, it really helps us out. Markets last week. All right, so a really strong week for equity markets at the end of the day. A little volatility kind of earlier in the week, but just some impressive earnings. And then Friday was actually a weaker than expected jobs report. All right, so Friday's jobs report showed an unexpected contraction, right? So an actual a net loss of jobs for the month of July, losing 20,000 jobs. Now that report, along with a couple other revisions, now like the 3-month trailing average, right? So the average monthly jobs report over the last 3 months is only a net positive 20,000 a month, which obviously is not great. And it puts the Fed in this tough spot. Again, the Fed's supposed to be looking at employment and inflation, right? That's kind of their dual mandate. And I don't know, for like a market nerd like myself, it's fun to see it in real time because you can actually quantify, markets actually quantify like the way an economic data point changes probabilities. All right, so going into the jobs report last week, the futures were pricing a 67% chance of a September rate hike by the Fed. Okay, just given inflation's kind of lingering, 3.5 change, percent, well above the Fed's 2% target. And so, markets had been, just the probability, it was pricing 67% Fed hike for September. And then basically right when that number came out, the Friday jobs report, that probability went from 67% all the way down to currently only a 42% chance of a hike in September. So it just kind of goes to show how quickly markets can move. And you know what? There's a good chance they'll move again this week because on Wednesday, we have an inflation data point, the CPI, Consumer Price Index. So we will see the month over month, year over year change on consumer goods. So it'll be interesting to see. And questions, comments, concerns, please don't hesitate to reach out to our team. Again, please schedule your review if you have not yet. And we hope everyone has a great week. Thanks.